Good morning, you're watching Chartbusters here on CNBC-TV18. I'm Sonal Bhutra and with me is Manglam Malu. Manglam, good morning. We looked at the global cues and they were indicating that yes, it could be another down day for our own markets, and that's exactly what has happened. The Nifty trading with cuts of 90 points, and it really is the broader market, the mid-cap side of things, which are underperforming today. So the mid-cap index down 1.5%, and for every 1100 stocks in the green, there are around 1900 stocks which are in the red today. The index is at the day's low, and this weakness in the mid-cap index that has continued. Yesterday as well, this index was underperforming, and today again there is some weakness there. So we'll have to see which way things go. But for now, the texture of the market continues to be in the bearish zone. It
continues to be weak. You know, the interesting part was that it opened lower and then there was a swift recovery. However, that recovery has been sold into, and that seems to be putting fresh questions to all the bulls as well. So that is something that actually, you know, we'll put forward to Manas Jaiswal as well. Manas, this morning there was a dip. Quickly, as the template was over the last few trading sessions, the dip was bought into, but then that was equally swiftly sold into. Now we're back, you know, just about 30 points from the lows of trade, and the mid-cap index, like Sonal said, has worsened. Almost 2,000 stocks declining right now. Your thoughts?
Good morning, Manglam. Good morning, Sonal. So first thing, I think the trend is definitely negative because last week also Nifty witnessed some profit booking, and on the weekly chart it made a dark cloud cover pattern. We saw some recovery, I think, in the starting of this week, but Nifty could not sustain above 18,800, 18,900 mark. So now when we have seen a lot of selling pressure, Nifty has fallen below 20-day moving average, and it has fallen below the neckline of head and shoulder pattern on the daily chart. So I think on the both charts, daily and on the weekly, we have seen some sign of reversal. So I think one should be very much cautious and one should not buy on this decline. I believe that even at current levels, one can definitely create short position. Stop loss should be around 18,450. The first target comes near 18,175, which is its 50-day moving average. However, I feel that Nifty can even go down and test 18,100 also. So I'm bearish on the markets, and even Bank Nifty is looking weak. And I believe that from current levels, you can see almost 500 to 600 points decline in Bank Nifty also.
Okay, so 500 to 600 point decline in Nifty Bank also. That index has been outperforming so far. Manas, in a scenario like this, when you are advising your clients as well not to build in fresh long positions, what would your individual technical picks be?
So there are two recommendations, and both are sell recommendations. First is a sell call on Kotak Bank, because Kotak Bank has been making lower tops and lower bottoms from the level of around 1950. Now, since stock has broken its 200-day moving average, I believe that you may see some more selling pressure. Kotak Bank can go down and test 1800 mark. So at current levels, one can create short position. Stop loss should be around 1861. And second is a sell call on M&M, where stock was facing resistance on higher levels, but today stock has broken its 20-day and 50-day moving average. So I think here also you may see some downside. M&M can test 1225. So take a short call here. Stop loss should be around 1286.
All right, take that point. Thanks a lot, Manas, for joining in. Let's move on and shift focus to our special segment then. Colleagues from Money Control Pro get you a few ideas of profit.